Good evening. This is Bizworld. Malaysia's economy grew by 14.2% in the third quarter this year, supported by continued expansion in domestic demand, firm recovery in the labour market, robust electrical and electronics (E&E), as well as non-E&E exports and ongoing policy support. According to Bank Negara Governor Tan Sri Noor Shamsiah Muhammad Yunus, the growth was partly lifted by the low base effect due to the strict containment measures in the third quarter last year.
So for the year as a whole, because of the very healthy growth obtained in the first 9 months of this year, growth this year will exceed the 7% that was projected earlier.
For the first time in 8 quarters, growth is seen broad-based in all sectors. The services sector expanded 16.7%, manufacturing 13.2%, agriculture 1.2%, mining 9.2%, and construction 15.3%. Overall, the country's economy expanded by 9.3% in the first 9 months of 2022. Headline inflation peaked for the year at 4.5% during the quarter, while core inflation increased further to 3.7%. The governor said inflation is likely to remain elevated, but the country is not expecting a recession next year, in line with the improvements in economic growth. Malaysia's International Investment Position (IIP) continued to record net assets of 76.3 billion ringgit at the end of the third quarter of this year, compared to the previous quarter at 62 billion ringgit. According to the Department of Statistics, both total financial assets and liabilities increased to 2.25 trillion ringgit and 2.18 trillion ringgit respectively. Meanwhile, the foreign direct investment (FDI) position in Malaysia increased by 24.6 billion ringgit to 860 billion ringgit at the end of the third quarter. The manufacturing sector remained the largest recipient with a value of 374 billion ringgit, followed by financial activities, wholesale and retail trade. The source for the FDI position was largely from Singapore, the United States and Hong Kong, while Malaysia's direct investment abroad position increased to 601.9 billion ringgit, mainly in financial activities. Malaysian palm oil futures firmed today, supported by a surge in early November exports and Indonesia's plan to raise its export tax reference price. After declining for 3 straight sessions, the benchmark palm oil contract for January delivery on Bursa Malaysia gained 0.84% to 4,213 ringgit a tonne. According to a palm oil analyst, Satya Varka, higher Indonesian tax and levy is set to diminish Indonesia's price discount, which will help Malaysian prices to rise. Palm has also made a stunning recovery and recouped some losses from the last 3 days, helped by bullish equities market. Since November 1st, exports of palm oil products from Malaysia jumped between 12.7% and 33% as shipment to India and China accelerated. Based on data, October palm oil stocks also expanded for a 5th month to a 3-year high of 2.4 million tonnes. MIDF research has maintained its positive recommendation on the construction sector in view of the manageable cost headwinds and the potential rollout of infrastructure projects in Malaysia. The firm noted that it is not overly concerned about the building materials price headwinds being a huge risk to the construction sector. While prices still remain elevated, it said the industry is comforted by the declining trend that has been observed over the past few months. It expects margins to continue improving in the fourth quarter onwards, though a dampener may be due to higher labour costs. However, this situation is forecasted to improve as construction is among the sectors that are allowed to hire from all 15 permitted source countries. And that's it for Bizworld. I'm Raymond. Thank you for investing your time with us and keep tuning in to TV3.